All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for October 13th, 2025. We are recording this at 4 p.m. Eastern Time, and this is episode number 498. So my name is David Cosmeter. You should be seeing on my screen right now and my charts, but for today's panel, I have arranged for Michael Filighera and Wally Olopade to join us again. And Jim, the option professor, is back to moderate, so I'm going to turn it over to him.
Okay, thanks, David, and thanks everybody for being here. We had a pretty wild 48 hours of trading, right? Down big, back up big, and so we're going to find out what this all means, hopefully. Excuse me. And today we had a bank holiday, so the credit markets are closed, but we'll be opening them tomorrow. And we're also going to have the bank earnings start tomorrow. So lots to talk about right now. And let's get started here. Wally, let's start out by giving a little bit of an idea of what you see happening here on the S&P, and what do you think might be happening here for the rest of the week?
All right. Quite frankly, after Friday's volatile episode that took place, it's almost one of those things from a technical analysis point of view where things got, shaken up and I need the dust to settle a little bit. But if I was to choose a direction, I would say chances are that we will probably start heading slightly higher, if not higher, only because we've pulled back to a level whereby, just like you see on the chart right now, I believe that's the 50 simple moving average. And so we've kind of pulled back to that 50 simple moving average. So it's kind of interesting to see that the market bounce back up from that level. And then from a candlestick analysis point of view, we just printed what is called a bullish harami signal. And what that typically lets us know is that, chances are higher now that we would see a reversal back to the upside. Should we drop, then I would say maybe within the next 5 candles, which would be by the end of this week, we should see another bullish signal. So chances are we'll probably start heading higher. How quickly and how much of a recovery we would have, that remains to be seen, especially now that we know that the banks are going to be reporting earnings. I think JP Morgan actually reports earnings tomorrow morning. And
Yeah,
so,
they do.
so I, that's going to play a little bit of factor in it. So again, I'm cautiously bullish in this case at this point, and so but I don't see an overall bearish market or anything like that at this stage.
Yeah. Do you think it looks a little bit like that July, August time frame where we had those two big candles down and then
Exactly,
yeah.
exactly,
So you think it's going
exactly
to
like
be
that.
kind of like that, yeah.
Yeah, that's what I'm kind
And
of counting on.
and the bank earnings, they have got trading profits that are going to be very, very large, and they also did $1 trillion
Ooh,
worth of mergers and acquisitions, which does not show up right away as far as revenue, but boy, that would give you pretty good guidance. So I'd be
absolutely,
kind of be shocked if it's not a pretty blown out quarter type thing.
absolutely.
Michael, what are you seeing here right now as far as what we're at and what's going on?
Shall I show my chart?
Yeah, yeah. And Wally, when you're talking, if you have any charts you want to show, please, please put them up there.
No
Thanks.
problem.
Please go for it.
Yeah.
Okay, there is the chart. Let me move all of us over to the other side. That's the Dow, which I just was working on.
Yeah, we're waiting to get it. Okay, you're up now.
Okay, that was the Dow. I'm changing it over to the S&P because that's what we're talking about. I'm going to the SPX and I'm going all the way out to my maximum monthly because I will comment on what my long-term picture is. There's the grand supercycle. There's the second grand supercycle. So I think we're still in the third grand supercycle, which is going to take decades before we see the end. And so I counted this out for everybody before. If you really have an interest, I do it once a week in in a weekly update that I make on my YouTube posting. But I think that what we're getting close to is completing this cycle third wave. So this big correction that folks are going to be looking for, I think we're close to it getting ready to begin, but I don't think we're there yet. And very much like Wally is talking about, I see the current drop. See, that's a third wave going up on a minute degree. All right, let me just go out to the daily, show you. This is the April slide to the tariff war. And we got down, and that was the minor degree. And so this is all a minor five, and it's going to have 5 waves of this white color, the minute degree, of which we only have up to the third. Now, yes, there's could be a shot where this third comes down here, and this is the fifth or the fourth, the minute four, which I think we're in now. And that would kind of make the possibility that yes, this could be actually only wave one of a minute fifth wave going up. And this is wave two, which either way uh, does suggest higher. And what I've also got going as well is I run algorithms and I ask the algorithm to update and to tell me what the outlook is using my analysis as a well as a ground, but also scraping everybody else's. And so I've not gotten anything less than we have the ability or the possibility we could decline. And we've got gamma levels and other things that kind of talk about that possibly happening on by through this week into Friday. Again, October expiration, October being now notoriously a down month. So I do think that we can decline into, first of all, Friday or possibly the week after. Now, what's going in the favor of all of this is earnings. And I know, like you had mentioned, that we're looking for the banks to kind of knock it out of the park again. Now, I think what could squash part of that would be uh, Jamie Dimon. And not that I disagree with him because I don't, but he always comes in with his version of the reality according to the economy, according to what's going on. And so he is still looking for a stronger downside. But this is where I do agree with him. He thinks it could start between now and the end of the year, but definitely by the end of the year into the first quarter of 2026. And I'm like, yes, because I think that what we're really going through is just a corrective phase. I'm going to go back down to that hourly chart. So if I'm looking for a four, this is A. I forgot I didn't update those letters, those numbers. So this would be wave A of the four, and this is likely could be wave B. We had several shots where we could get up above it, and we didn't. So still, I have to leave it open that we could get a B, but then we come back down and we go below this level. And then, excuse me, I also have other things out there, and that could suggest that we could get down to like 64.20. So I got, in between all of this, I do have what I asked the algorithm also to run an event momentum type of a move. And so it puts it into probability, but it also puts it into percentages. And so within the S&P, there's a 5% chance of getting that momentum. Well, guess what? This whole thing was a momentum event. It was kicked off by, you know, our president discussing what he was discussing. And so what really contributed to this, and this is coming back into your wheelhouse, that really what kind of started to kick it lower is we started breaking gamma levels. And when we started, and then we finally broke the volatility trigger, which were all compacted and higher up. When you break a volatility trigger going down, it really signals that you got to move from risk on type trading to risk off type trading. And the fact that it happened on expiration just aggravated the whole situation, which
Well,
is
it really does because, first of all, when the VIX got above 16, 17, which I was mentioning to people would be the limit of where it would be safe, and then above 16, 17, you got to get out of town. The
yeah,
fact that they do it on a Friday is really telling you that it is a market maker's thing, because
right,
anybody who had sold puts, and plenty have because it's been a rising market, had
right,
to buy back all those puts at a huge loss, like $10,000 an option in some cases.
right,
And they had to take the loss because they were expiring. So
right.
you know how many people I've run into in my career who go, "Yeah, I'm writing the options. There's only 2 days to go, so I'm going to grid it out." Or there's only
Damn,
1 day to go. I'm not going to cover. I'm going to go to the bitter end here. But,
yeah,
that mentality works maybe 8 out of 10 times, and then the 2 times it doesn't work out, you get totally slammed, possibly.
right.
And so
No,
this is the Friday was a picture perfect example of when you write options, you're taking risk. And even if you win at it most of the time, there will be some time that comes along that they are going to catch you in it if you don't risk manage it properly. And 9 times out of 10, you could leave it till the end of the week and it would go to zero. But the one time it
It,
didn't, this
it
time
didn't. It
cost you
caught you.
10 grand, and you're
Yeah.
dealing in a strategy that brings in a couple $100 at the most, and you're losing 10 grand on a trade like this. You'll have to go 10 years of being correct just to get back to break even.
That's a truism.
So I mean
And
that's the danger of the writing of the puts, and that's why happening on a Friday like that
right.
is really really damaging to those sellers. And of
Yeah.
course, if there's a lot of people selling, the market makers are on the buy side, so of course they didn't mind. You know,
No, they actually were the big winner. The dealers were the huge winners here. Uh,
absolutely, and that
be-
and the people who knew that he was going to make that comment.
um, yeah, I don't know any,
Yeah,
but
I'm just saying anybody who knew that he was going to make a comment about China like that obviously could position themselves into that type of activity. And
yes.
so,
But again, the fact that we gapped
mhm.
was not, it did not surprise me. And the reason it didn't surprise me is because, first of all, this little slide, this one not true. I got to go over to show you the ES because the SPX was closed by then because we have that extra hour. And after the close, the New York close at 4, we have an extra hour where the futures trade and the stocks trade. And so we were kind of right in here. And then he said, "Oh, I'm going to tack on 100% tariffs."
Yeah, I mean, so that's a big
And
thing. But
then,
look at your 30-minute graph. Your 30-minute graph told you that it was going to collapse once it got under 67.20, right?
well, not only that, yes, but this was the options are closed. Options are done. This is just the future and the equities, future
Okay.
and the equities trading.
Or maybe
And
people who got caught with the things trying to hedge themselves after the
Well,
close.
but not only that, but you're right, they had to sell. You got that. And if you ever looked at something like Nvidia, which is super popular, right? They got caught and they had to sell it. And the next thing I saw was a print at 180. And you know what the print after that was? After they were all done? 183. You know where it's
Yeah.
trading today? 187.
Yeah. Yeah.
So to me, it's just like, yes, it was a total rip, but I think we have to leave open the potential that we have one more swing lower, and
Yeah,
then
because they did do technical damage when they break it like that. So it's it could go right back up in that V-shaped stuff because V-shaped stuff
it
happens all the time
actually
nowadays.
could. You are
But
correct.
my big number is 66 on this. I'll tell you right now, because this was a big thing. It violated, and now it's not violated. So my feeling is the number of 65.90
Okay,
is the big number on SPX. And if it
right,
broke
right
back under
there.
65.90, it
Yeah,
opens the door. Because if this really starts taking out the lows, this thing is going to go from a 5% correction down to the 50-day average. Could very easily go down to a 10% correction down to the 60 200 area.
6120 to be exact.
Yeah. So the bottom
Um,
line is that's why he switched his tune very fast over the weekend because causing a slight correction is a lot different than causing a 10% correction.
oh
Because once you
no,
do a
agreed.
10% correction, then the technical damage takes maybe some time to go through.
I agree. I totally agree with
One question
everything.
I have for you though is, and Wally, I'm going to get right back to you in 1 second. I just wanted to have one last quick question to Michael. What is the story on going to 7,000 on the S&P? Because the way the math works there is we started the quarter at about 6,700,
Mhm.
and guys say it's about a 5% increase in the S&P on average for the fourth quarter. So that would take you to about 7,000 on the S&P. Under what reading that you have would 7,000 even be possible by the end of the year?
Oh,
Like, do you have any kind of a Fibonacci
yes,
extension or something?
absolutely.
Yeah, so
It's
let's
not
take a
even an
look at that and
extension.
see if there's any merit to the
This
idea.
would be, we're going to come down in this minute fourth wave. So that means we have a minute fifth wave going back up. If I take this, I got to go, I don't want to go too far because then you miss a lot in between. So what I have, these are the numbers that go along. Now I can go out to the daily, sorry. This minor, that's that low. And we're doing a minor fifth, and then we're doing minute fifth and fifths all the way up. But we're doing that minute fifth. And once I get that fourth, I can put some more levels in. But the minimal would be 7,000.
I got you.
But
Yeah.
one thing I will add, the call wall in the SPX now,
Yeah. Where is that?
7,000.
Okay. So that makes sense that would be their
So
target.
yes, I was going to say, you know where the magnet is now.
Yeah. Yeah.
Okay.
No, and
Yeah.
believe me, the math works too.
Yeah.
In other words, 6,700 average gain, 5%, you're at 7,000.
Yeah. Oh yeah, there you have it. Yeah.
All right, let me jump over to Wally here and give Wally an opportunity to explain to people how he's trading this market. What maybe some of the stocks you're looking at, Wally, or maybe some of the strategies you're trying to look at.
Yeah, absolutely. Can you see my screen? This is the S&P 500
Got it right
here.
in front of us. Yep.
Yeah, excellent. And so this is the weekly time frame. Let me see if I can do this if we can. Hold on one second. Let's go back here to the weekly time frame. Sometimes I like to just zoom out. Let's see. You guys see my screen? Can you hear me?
Yes. Yes.
Yeah, a little bit spotty,
Okay.
but yeah.
So I don't know what happened there.
Yeah.
Okay. So this is the weekly time frame. And again, as a technical analyst, I like to look at the charts. I like to see what is it communicating and all that kind of stuff. That big red candle on Friday, like you said, definitely put a damage to the technicals and technical
Mhm.
analysis. And sometimes
Mhm.
when this happens, we just have to like let it, simmer down and let the dust settle and all that kind of stuff. However, I would say this. Um, what the candlesticks are communicating from the weekly time frame is that, you know what, there are definitely bearish sentiment beginning to develop. Okay. And so the only thing now we have to do is see if we can confirm. So that's kind of like what I liked what you said when you said if we take out what it was a 65.90 or something like that, you said
Yeah.
if we take that low out, I'm here to tell you, okay, watch out below.
Yeah.
And
Mhm.
Because the VIX is right now at 19, and so
yes,
it tried to bring it down to 16. How did it do today? Let's see.
let's go to the VIX.
What
Hold
was
on
the,
one second.
what was the low on it today? The low was at 16. No, the low today was, my cursor is not
The low
helping.
was
18.
1861 today.
So, like I say, it's having it used to have to be under 18 to be in a nice quiet market where go higher all the time.
Yeah,
Now it's getting comfortable above 18, and that makes me uncomfortable because once you go above 2025, now you're in the soup like you don't know.
absolutely. And so that would be something we definitely want to watch this
Yeah.
week, personally, without a question. Again, today was like literally the first day after this major event. So it's okay, it's too soon to make a determination. But I
Mhm.
think by Wednesday, for sure, we'll have a better idea. And here's the way I would look at it. Let's just even take what happened today. Um, on the VIX, should we close higher than today's high at any time this week? Watch out.
Yeah.
The market is going to go crazy down.
Yeah, because for the
What
first
we,
time in a long time, I've got a 12, 24, and 36 moving average on the VIX, and it comes in at 1702, 1640, and 1606. What that
okay.
Mhm.
means is all three of them are inverted to the upside.
Mm,
And that
mm,
is not a downtrend. That is an
mm.
uptrend.
That is
And so that's why I'm saying if I was thinking about making major commitments, I would want that VIX under 16.
absolutely,
And
absolutely.
then
I totally agree.
and to be honest with you, I don't think you're going to 7,000 on the S&P until you get the VIX under 16. So that's how I'm seeing it.
I would agree with you 100% on that because the VIX needs to drop in the event that the market is going to rally higher. So without a question, yes,
Yeah.
that does need to happen. The question that I have though is, again, I like seasonality as well, and
Yeah.
October tends to be we've been waiting for it because like September was supposed to be the month where everything is supposed to go down, and then we bottom in October, but we didn't
Yeah.
get that in September. September ended up on a positive note. So I was okay, something's going to happen in October. So
Yeah.
here we are, all last first week in October, nothing. Second week, and then, like I said, Friday comes, and it was huge. And sometimes that's all it takes is that that 1 day move, and it typically would have taken maybe 2, 3 weeks. Okay, and it did all that in 1 day. So that's where it is a possibility that, you know what? All right, now that we've had that pullback instead of a 10% correction, we just had a quick 1 day pullback, which is enough to give us what we need to say, hey, let's reset everything and see if the market is going to go higher. So again, today was just the first day. It's like, okay, let's see where we are. So far, so good.
Yeah, exactly. That's
Tomorrow,
exactly what today was. Today was so far so good, meaning that they brought it underwater and now
exactly.
they brought it back above water.
Yep.
And if they can't get it back underwater, then that's a very good sign. And the
There you
correction
go.
was not minor. I measured out on the QQQ; it was about a 4% drop. So 4 or 5% drop is a
Yeah.
pretty. And if it happens all in 1 2 days,
In one day, in one
yeah.
day, in
So
one
that's
day, really.
those are the kind of drops that can turn around right away, because that's what we've been getting is short, shallow, and right bid up again
Exactly.
drops. So yeah,
Exactly.
it's consistent with what we've been getting if you get any kind of a drop, which is brief and bid.
Yep.
Yeah,
I
it's
call it
brief and bid.
ferocious
Yeah,
and then a rebound. It
yeah,
was ferocious. I mean, that was
Yeah.
probably one of the most severe drop we've seen in quite some time. And so,
that was since
um,
April.
since April, okay, see? And
Yeah,
so,
Yeah.
for that to happen, and it's happening in October, I always say, look, it's almost like
yeah,
Fibonacci, right?
yeah,
When we talk about Fibonacci, it's like it seems like it's random, but it really is not random.
Um,
And so I'm just like, okay, how is it that we expecting something to happen September, October, and then this happens? Is that random? Is it coincidence? Is it part of the nomenclature of what should happen? I'm like, well, regardless of what happens, the fact is we did get a pullback. That's one thing that we wanted. And so
yeah,
now I'm really looking forward to I'm not going to make a decision today simply because I need a little bit more data, which I think I'll get by Wednesday. And
yeah.
then that would
mhm.
tell me whether or not we're going higher or we're going lower. But if we should go higher, because again, once we see market pull back in October, then we rally to the end of the year. It's typically
Yeah,
what
and
we
the end of
see.
the year is 8 weeks away, so let's not act like
Exactly.
it's
Yeah,
some
really.
distant island in the Caribbean. It's very close.
I like
Anybody
that.
who's over 21 knows how fast 8 weeks go by.
Exactly. So I'm looking forward to that. So honestly, I was happy.
Yeah, yeah,
Didn't like it. My account was red,
yeah,
but I was happy that it happened because I'm like, okay, finally we got this pullback. Now let's see what's going to happen. And so if the VIX drops below 16, you better be buying. This is what we call back up the truck.
yeah,
If the VIX drops below 16, you better back up the truck and just load up and just go on vacation to the end of the year. You'll be
yeah,
fine.
yeah. Hey, I want to switch over to gold, Michael, and I want you to put up your screen now and give us some
Okay.
ideas on gold, because what I heard about the gold that was interesting is that households, have stock, they have real estate, they have thing, but most households haven't had a big allocation to gold. And gold and silver, in reality, are very tiny markets compared to stock, real estate, and bonds.
Right.
So, if people really decided to diversify because of they're looking at the debasement of paper currencies like the yen, uh, and they just increase their stake by just a little bit, the amount of gold that would have to be produced to back that is twice as much gold would have to be produced to back. I think even if it was just like a 1% increase or something. So again, the entire silver market is supposed to be $50 billion. So in this
Right.
day and age, I mean, scarcity is what drives these things. The reason Nvidia is up through the roof is they have a chip nobody has. It's scarce. The reason these Mag 7s are so up all the time is they are scarce. There's only one Meta. There's only one Microsoft. There's only one, what do you call it, Amazon. You know what I mean? There's not a lot of companies like them. So
Right.
gold, and silver, they have a scarcity. And Bitcoin, I mean, they came up with some mathematical formula that they say only so many are being created. So obviously they're willing to pay 100 grand for one of them. That's all scarcity. And
Right.
so if it comes to pass that really people factor in that gold and silver are really, and that's why these MP metals and USAR, uh, because they're rare metals, rare, right? Rare
Mhm.
metals. So
Mhm.
if the drum really gets pounding of the scarcity of silver and gold, along with other materials like copper, because you got to mine these things.
Right.
The price that gold could go to is, that would be the cause. It won't just be because inflation might go up, or it won't be going up because the value of the dollar might change. It might go up because people just come to conclusion is this stuff is not like plentiful, and these
Mhm.
paper currencies are clearly plentiful because they can print them like the LA Times.
They do
So the
print them like
bottom,
the LA
and they
Times.
do print them like the LA Times. So people are looking at how much debt is out there, how much
Yeah,
deficits are out there,
yeah,
and how much the money supply is now roaring to the upside again.
yeah,
And I think that's what that's why, to be honest with you, people have been in gold for a long time. They find some of these numbers shocking, but not
yeah.
if you compare them to the national debt and all the other stuff going on. So what are the charts saying? Because I'm sure there's people out there going, gold's at $4,100 and it's getting a
And
little bit
stayed
far away,
there.
but it's far away from its averages, which makes
Well,
people very concerned that it's overbought. But what are you saying?
well, well, it's been overbought. It's been
Yeah,
overbought for several
but
weeks,
now
but
we're pretty extended now. We're now
we are
$4,200.
extended, and I do see a correction on the horizon here.
Okay.
You just look, this is a weekly chart. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So the last 2 months plus a week, we have soared higher
Yeah.
beyond my expectations, beyond most people. Now, yes, I've been talking about gold for a long time on this program, and I've always had that 4,000 and above. But now we're racing to get there. Now, this, because you spoke about the rarity or the shortage of available silver.
Yep.
And because, yes, SLV has to back all those trades with physical. There's not enough physical. And so that number one, I believe, is what's creating this, which on the other hand,
So you're saying the ETF demand, because they have to back it by the physical metal, that could be where the squeeze comes from.
there is and it definitely is a squeeze, but here's the other
Yeah, because
component.
you're at $50 on silver for those of you who don't know.
Well, not only $50, but we, by a little bit, by a couple of cents, 5 cents, I think it was, we went to a new 45-year high.
Yeah.
So the high was still being held by 1980, which was 50.50. And today, I think we just inched above it by a few cents, but nonetheless, that's a new all-time high in silver.
And
So,
a 30% move in 6 weeks.
yes. Now, this came from clearing firms. You cannot short silver.
Oh,
We can't borrow because they can't borrow.
I'm laughing because last time I heard that was you can't buy silver with the Hunt brothers for 52 days. They made buying off the table. Now they got the selling off the table.
Well, well, not only, but if you have a short position, of course, what I'm looking for now, I want to see tomorrow or maybe even come in today, what the margin is. Because don't forget the margin keeps flipping higher, higher,
Oh
higher.
yeah, and
And
that causes a squeeze too, as far as people having to
yeah,
come out. Yeah.
yeah, because they have to. Now, so with all that in mind, we are watching gold go up like that. The dollar was higher today, not going through the roof, but it's gone from 97 up to 9 above back above 99. All while gold is running higher. Now, we did see some volatility come back in gold, and that's the GLD SLV options coming into play. But it is just, I think right now, to be honest with you, I think we're just getting ready to finish this third. I mean, there's so much upside left in gold. And people say, well, what's going to do it? It's like, all
What's going to do
kinds
it is
of,
no. It's just people are going to want it. There's not a lot of it out there. And so obviously you have what they call a supply demand squeeze because again, they have to produce it out of a mine. They can't print it,
no, you're
and it takes
correct.
time to take it out of the mine and then you've got to refine it, and there's
and
a
there's a
panic.
limited.
Obviously there's a panic of people who want this because they've woken up and figured out that, you know what? They are printing us into the oblivion. I mean, they see what's going on in Argentina. The currency in Argentina is a joke, and we're throwing up 20 billion to support the peso,
Well,
and that's not
that's
going to
probably why
support
we're
it very
buying gold
long.
now to protect our own stuff. But
Yeah,
you make very, very valid points. But in terms of Elliot, in terms of the
yeah,
technical picture,
yeah.
this is the 3 week weekly. I think I got up here. No, it's the 5 year weekly. Look how overbought this is.
Yeah, I got it on my
That's a
screen too. Yeah,
five-year chart, folks. And
yeah.
so it's up there. So, yep, you said it. Jim, that everybody's kind of coming. Now I have to have it, and you better get it because it just keeps going
Yeah.
up. So the
Yeah.
fear of missing out, and that forces it to make a short-term top. And I think that's where we're at. Because again, this whole thing, I got to go out to my monthly max. It's just subdividing. This is the size. I got a third wave going up, or at least a C wave, either or. I don't label anything above a cycle in gold or silver because that's the how big they get. If you go beyond it, they don't build. They don't build. This one is. So anyway, so we're in this third wave, and it is just subdividing once, twice, three times, four times, and actually five, but this one's getting ready to finish.
Mhm.
So each little hook lower I'm just going down a degree. Cycle, primary, intermediate, minor, minute, minuet. Now come all the way down. So that purple one, right? Look at what took place in here. Look at that third wave.
Mhm.
Now, it is usually the fifth wave. So I come back up here. Look what the fifth wave's doing. Soaring. This was a fifth. This was the fifth inside the third. Now we're doing just the fifth inside this third. So I think I have resistance at 41.75 up to 42.03. I think we can get up inside there. Now, we got what was today's high?
I got it at
41.37.
41.37. Yeah.
I'm like, wow, I wasn't really expecting it to go that far above 41, but there it is. And yep, little pullbacks, had some little pullbacks, but it's just going pretty much straight up. But this is my feeling. Because we're going to correct wherever this ends up, that's what's going to correct. And if we just listen to what Elliott left for us in terms of a guideline, fourth wave in motion will find its terminus or its endpoint within the fourth wave of one lesser degree. Well, this is a minute degree. One lesser is the minuet, and there's the low. So we're running into the potential, but actually it's the whole window. So we're running into the potential of gold correcting between 3,500 down to 31 or 32 or 30, no, excuse me, 3,300. So from where we are, that's a pretty sizable correction. But can you imagine how healthy that's going to be for the supply?
Yeah.
When people are going to be getting out, other people can cover,
So
right?
what's your target here? Around 4,200, you think?
Well, to be honest, that's the next target. If it
Yeah.
slips through there, then I got 42.75 to 43.78.
Yeah.
So
Can
it
I
gets,
can I
it
jump in
gets
there and say something,
broader.
sir?
Yeah, sure. What's your, well, yeah, no, throw your whole opinion in here. Let's hear what you say.
Yeah, mine would be about 400. Well, I'm looking at GLD.
Oh, okay. Put up
So
GLD then so we can talk turkey.
GLD, I know.
Yoki. There you go.
There you go. So
Yeah,
400.
okay.
So
Wow.
what's the 400 level on GLD?
Right.
That's kind of like where I'm
Well,
looking
it's a
at.
new high. You got to open the chart up even further. They didn't
Yeah,
even go, they haven't even got that number up there yet.
yeah. So
Well,
let's go.
because it hasn't happened.
Right.
Yeah.
These are all
And
new highs in GLD too.
yeah, and there's a possibility that I would the rally, barring occasional pullbacks and stuff like that, we'll probably see this rally keep on going to like sometime in December. And the
Mm.
premises of that analysis is something that if anybody's ever read the book by Tom, I think his name is Thomas Bukowski, he talks about the um, triangle breakouts, which is exactly what we see here taking
That's
place.
because it happened right
Where,
here. There's a
yeah,
small one right
let,
there.
let me let me show you my chart so I can
Yeah, yeah,
nicely
yeah.
yeah, let me
Yeah.
show you my chart. Show you
Yours
this
will
real
work
quick.
better because you've got it all labeled.
It's very close.
Exactly.
It's very close to what you have. So let me just share this real quickly. Um, I already drew out the lines and everything, so hopefully you guys can see this.
Right. That
Okay.
is the triangle.
Okay,
Yeah, got it.
so why does this keep on happening? There we go. So let me try this again. We'll go back to the weekly time frame. So
Uh-huh.
we had the base that took place and we broke out somewhere around here.
Right.
And then you can see that, doing that whole consolidation, you can kind of connect the bottoms of this and consider that a trend line.
Hmm.
Where they intersect, somewhere around here, that intersection is typically where the rally will continue going before we have any major reversal to the downside. is typically what you can expect. So
So
that brings
what
us
is your what would your target be on the upside?
on the upside. So the way we do that is the length of the rally before it started basing is pretty much the same length that you would have when the breakout occurs. So if we take this from here, where the breakout, when it started rallying to this breakout right here, you literally take that and then just put it where the breakout was. And that's why I said somewhere around 400.
Yeah.
And between now and sometime around December, again, you might have some pullbacks here and there, but a major reversal should not happen. And I'm not expecting a major reversal to happen until December. And then you'll see that at that point, we'll probably be about $400 on the GLD. We can do the same analysis on future gold. So if I go over here to the futures on gold, do the exact same thing. So we draw our horizontal line right here. Yep. Here's our triangle. Yep. So you connect these two dots right there and then just extend it to the right. And extend this to the right as well. And then somewhere around here, which is November. So I'll say end of November, beginning of December is what we're expecting as far as like how long this rally can take place. And then as far as like the target, we go back here where the rally began, go up here to where it took that pause, and then you just literally copy and paste. So you activate this and then just move it to the breakout. And wherever that is where we're expecting it. So we're talking about 44, 43, 44.
Yeah.
Very simple way to kind of like.
Hey, listen, this thing is going $100 increments like chewing gum. So, going up another $300 is nothing.
It's nothing to it.
Nothing,
exactly.
Nothing.
Exactly.
Yeah, especially when, like I say, if the word gets out that, there's not enough gold around or there's not enough silver around. I mean, that's how these things can there's got to be somebody who has some kind of a hedge they're going to have to take off. You know what I mean?
And who it's going to be.
When they take that last hedge off, that's how you get to 4,400, and that might be the end of the story. I mean, temporarily. Yeah, temporarily.
Absolutely. I agree.
Well, if I may add something, what I really like, Wally, is this is analysis, but it's a little bit different, but it matches the Elliott and matches the Fibonacci.
Yeah.
Awesome.
Yeah.
It really does, because I have fibs up above 43 to 4,400.
There you go. And I've always said, whenever you have two or more different analyses coming to the same conclusion,
right?
That's a very, very good
setup.
Well,
the only thing I'm looking for is where is the county of the high, so that I can start looking at puts a month out. And you buy a put a month out and you get a top at 4,400, and then you decided to bring it down to 3,800. Well, look at GDX. Somebody's going to buy puts on that GDX at some point, and they're going to get paid. GDX. And then SI.
And then 2026 to get paid, though.
Well, that's what I'm trying to say. Who cares if they're going to get that kind of pay? That kind of pay I can wait for. It's not going to be like the government pay because it's shut down kind of pay. This is going to be like big pay. So where's you have GDX up there?
Yeah, this is GDX.
So I mean,
daily time frame, weekly time frame, monthly.
Let's do the GDX and the SIL, because this is what stocks are all about. So
okay, you are looking at a daily time frame, weekly time frame?
Yeah, no, daily.
Okay. All right, this is a daily right here.
Yeah. So how do you measure it out here, and where do you think you're going, and this kind of thing? So where's you got a triangle on that too, a little bit?
So not necessarily based on that. I mean, we can see where that breakout was. I'll have to go to that weekly time frame.
Yeah.
And again, do the same thing as far as that is concerned, from there to there, and then just copy and duplicate this line right here. And we kind of already over there, to be quite frankly.
Okay,
and
so
we already surpassed.
They even overshot it a little
bit. They overshot there.
So this is the neighborhood to be sniffing around that area. What about on the silver stocks? I think it's SIL, is it?
SIL.
Is that the silver stocks?
Yeah, same thing. It seems like it's overshot too as well, because if we're looking at this breakout over here, and then we coming from here to there, it's definitely overshot this level without a question.
On the silver stocks, yeah.
Yeah. So this is where I would then switch to Michael's, analysis on, Fibonacci's. It's like, is there any Fibonacci, what do they call it, Fibonacci extensions that we have to look at and try to see where could we possibly end as far as this is concerned? This is me like saying we're in no man's land.
It is in no man's land. And just imagine if it had because there's not a lot of technical support on that thing. So if this thing wanted to have a correction going back to 60s, not off the table, that's a $15 move on the downside.
That would be
right?
great. I mean, that would be good. That would be a decent pullback to
All
be able
they
to
need,
jump back in again.
I mean, if there was a guy named Trump who could go in there and make a comment like, everybody who owns silver is owning a radioactive material, get rid of it. You know what I mean?
Yeah.
Yeah.
Let's go ahead and tweet him right now and say that.
Yeah, what we need is a silver Trump. That's what we need.
Silver Trump. I like
what
that.
about the Fibonacci? Let's jump over to Michael and see if the numbers he has gives us a better target on these gold stocks and silver stocks, or a different target.
Let's see. Let me go back over. Where am I? I got to get down. Oh, there I am.
And then I want to hit energy before we run out of time, because that's another thing that's at a critical joint too.
Well, if you take yours down, I can put mine up.
Oh,
yeah, I thought Dave did that for us. How do you do that?
Stop share.
Okay, stop sharing. There you go.
Okay, so I'm going back over here. And which one are we looking? We're looking at.
We're going to look at GDX and SIL.
Actually, I don't have analysis on them. Oh, I did. I think probably this is the last time with you, Jim. But look at what we've done. Holy crap. See, I would take it.
Holy crap is the word for real.
Yeah, really. That's like, no, I'm Frank Barone. And I want to see, the thing is, it's like, it is these fifth waves. This is a fifth wave. It is just incredible. So if I just kind of even do basic stuff here, I can do this to here, and I'm going to put it over, and it's just going to show you how far we've gone. Even if I'm doing it from here, but I probably would
So
go.
you're 61%. We're way past that as well, huh?
No, I'm talking, that's 423%.
Oh.
No, let me go and change all that. Let me get out.
No, I think he's talking about like your 61% on the
Fibonacci.
on the Fib numbers.
Yeah.
No, the Fib no, that's $61 on the Fib. That's the price of SIL. The percentage from where we are, it's up 423%.
But is there any, shall we say, projection like you do?
Yes.
Where you,
let me go to this one.
Maybe
it's all multiplication, right? So
yeah.
Let me just get this set up. And then come on, system 5.618. And I'm going to go to 5.882. And I'm going to put one more up there, which is 6.618. These multiples do work. People go, oh, that's just ridiculous. No, it's not. Compared to what the move is. There you have it. These are the extensions. So right now it's surpassed 5.882. Next one up is 77.68. If you do the math, Fibonacci, and even when you're doing these levels, it's just multiplication. So you're multiplying one level by the next level up.
I got you.
And it just keeps growing. So I do it mostly in like I would use 5.618, 5.882 because algorithms use 882. And then I do 6.618, 6.882. And I just build it all the way up. And people go, oh, that's ridiculous. It's like, really? Are we there?
But look at that RSI, man.
Oh yeah.
It's beat red now. It's beat red.
Yeah.
Yeah. So the bottom line is, if you could find a formation up here and the news would change a little bit, it would be a very interesting, and the pullback would be probably very sharp for whatever reason.
Well, because it's so stretched.
Exactly.
And everybody's going to go, look at the powering of what this market has done. And for all we know, like you mentioned, it's short covering.
Now, because we're running out of time here, I want to hit a couple of things real quick. Bitcoin seems to be having some trouble here, but Ethereum seems to be going a little bit better. And I'm wondering if you have a symbol on Ethereum, and if it looks like it might be.
I thought it was ETH. Yeah, it is ETH.
Yeah, it's ETH, correct.
Wow. It is exceeding everything that we had a while ago, Jim, last time.
Right. Well, like I say, it's the backing of stablecoin. So,
1, 2, 3, that's a 4. Okay, I'm going to show, let's just do basic. And then I'm going to go up here to this 4, if it holds. 52.93. 49.87, and then it breaks 5,000. And that's just plain old fibs. Let me pull it out again. I'm on that. Wow. I have to go all the way out to here. Yeah. It's hard for me to pull it down. It's never been up here. Oh, yeah. If they really get squeezed. But
Yeah.
right now I'm thinking, yeah, 49.74 because I think there's going to be a lot of pressure to keep it under 5,000.
Okay.
But if they can't and it breaks, then it's going to, I think the spike could take it to 50, 52.93, 5,300. And this is just open territory because of just the way the fibs are set up. But I could fill it in a little bit, but they're not common. They're not common levels. So, if I put 1.382, that you don't use on an impulse wave. You use that on corrective waves. So you got to, because a lot of people just stick them in there and it's like, well, that doesn't really work. Yes, you'll get a number and the market may go to it, but usually it's going to mess up your count. And I'm just thinking what we got is just we're coming up and this was the four and we're not done. We're almost, because what you're looking for in that fifth is that it goes above the high of the third, which is 48.85 and keeps going, right?
Yeah.
49. Yeah, there it is.
Because there's, we're, like I say, we're only about 8 weeks away from the entire year being over, and some people are talking about Bitcoin may go to 200,000, and Ethereum might go to 10,000, and the
By
S&P
year
is going to
end.
go to 7,000. And if these things are going to happen, I mean, I have this stock IREN, RERIREN, that I started getting involved in the 2025 neighborhood. It's up at 70 almost, and now it's backing off. But the point,
REN?
IREN.
Oh, IRE.
Wow. Yeah, that one took off like crazy.
Oops. IREN.
So did HUT, HUT.
Wow. Wow.
Yeah.
What are they? They're
They're involved in Bitcoin. I don't have it right in front of me. There's so many stocks I got in my head I can't rattle them all off. But the IREN and HUT are two, shall we say, Bitcoin crypto creating affiliated companies
right.
that have been in my account
Let,
for a
let me
very
just
long
play an
time.
advocate on this one.
Yeah.
Because from the weekly time frame, so there are, should I say, warning signs
Yeah.
of topping patterns
You should say
on
yes.
Bitcoin, on
Right.
Ethereum, and then
Right.
even this HUT that you talk about and IREN. So um, if you look at that long wick that you have from last week at the
Okay.
very top,
Yeah.
that's usually a bad one. And I'm seeing this across now. Again, part of that is due to what happened on Friday.
Yeah.
And so this is
Yeah.
where I'm like, okay, is that Friday situation a major warning sign is what's going to happen, or is it just like a glitch in the system? And so
Artificial.
exactly artificial. So the way I look at this is this: if we can close above those highs of Friday, sometime this week or next week, then yes, we're going higher.
Yeah.
But because like let's take away the news. Like usually I like to try to just look at the charts and I just like to look at the analysis and say, okay, what is the chart communicating? If I didn't know what the news was. If I was just look at the chart and not know what the news was, I would say we are showing topping patterns. And when
Mhm.
topping patterns are appearing, maybe they're appearing for a reason. Somebody knows something. They are overextended at this point. And when they overextended, chances are it's going to be difficult for them to go higher. The only the only issue was what happened on Friday. Take away Friday. If this was just any regular week and I see this, I would have said, yes, I won't even bet on this going higher at this point. But Friday really threw a wrench in the whole thing. So now I'm like, okay, let's let's see if this stuff settles and this is going to produce more warning signs. But I would definitely say there's warning signs. Take away all the news, take away all the practicals and the theoretical stuff out there, and just looking at the technical alone, technical tells me warning signs, heads up.
Yeah. Yeah. And it's so overextended.
Yeah. Because
And,
that's
yeah,
that's where
and
the
that's
I
the bad
think
thing
yeah.
about it because now that it's overextended and it's showing warning signs while it's overextended. It'll be one thing if it's showing warning signs right when it was first trying to take off.
Right.
Right.
Okay, we can dismiss that. But after an extreme overextension, and then you add the warning signs,
Boom.
I tend to like say, okay, let's tread cautiously. And I
Right.
would need that resistance level from last week to be cleared before I would have any faith. And again, this goes into Bitcoin, this goes into Ethereum, this goes into all of them, quite frankly. It's like
Right.
something is just not right.
Yeah,
Right.
something. It's a little bit spotty up here, but the people who are pretty committed to it, they are pretty firm that the fourth quarter is going to be very good for stocks, and it's going to be very good for this crypto stuff too.
And so that's why I said, if that's the case,
Yeah.
what we should see is that we should clear Friday's high. And
And like I said,
so,
there's a lot of other stocks besides those two I mentioned. Riot is not as extended. Mara
okay,
is not as extended. So, just like on rare minerals, MP's extended. ALB is not quite as extended. Let's
true.
take a look at ALB because that's kind of in the same.
You mentioned Riot. You see where Riot got
Yeah,
to?
yeah, right, right.
This was what you
Yeah,
and I put up last time we talked about Riot. It hit
yep,
100% today
yep,
or
yep,
Friday
yep.
and backed right off. What was the other one?
Let's look at ALB because that's in the rare minerals business, I guess, or something. ALB, as in boy,
Oh,
ALB.
there you go. Oh, but okay.
Yeah,
Oh, this has a
and this
ton of life. Might be a little overextended right now, but it's not over. Oh, it's not overbought like everybody else.
that's what I'm saying. If you look at one of these things like USAR or MP, USAR, I mean,
Wow.
that
Yeah.
yeah, or
After
MP,
trading flat for years.
yeah. Well, obviously, and then
How do you find these stocks, by the way? I'm just curious. Like
I
you,
just keep
you just listing
lists
stuff
by
off, man.
sectors. I keep lists by
Oh,
sectors. Yeah.
I got you.
And then
Okay.
I get 9 million emails from 9 million crazy people. And out of the crazy people, there's a few ideas that I get out of them. You know what I mean?
This is rare earth, right? So this has got a
Yeah.
reason to go shoot up.
Yeah.
We just
And
get
so did
some rare
I'm
earth.
saying MP and USAR are the two lead dogs. Look at
Yeah.
MP. You know, they're the two lead dogs. But ALB would be a dog that might catch up to them. And Freeport McMoran, FCX.
Really?
That is a dog that might catch up with it too. You see,
That's
because
true.
it's had its drop and it's just in there. I mean, if
Hmm.
this thing started trading 58 or 50, 48 or 50, look at the longer term graph on it, and maybe it might tell you that there's
Well, this
not
is the
like
5-year weekly.
yeah,
There's
5 year
more.
weekly. If it got above all that, wouldn't that be a huge head and shoulder thing? Maybe.
Oh, yeah, you
It looks
could.
like it. Yeah, it looks like
Yeah,
it.
you could.
Yeah. And they,
I mean, the
like
whole thing, the whole thing is just like we got stuff that you might want to go into, but are you late?
well, here,
Um,
if you look at this chart, and I say to myself, is it more likely this thing is going into the 50s or into the 30s and 20s? And if I look at that graph, I say the most likely thing is if we had a conversation 6 months out, it would be much higher, not lower.
okay,
You know,
sure. Well, because
because
the shortage.
unless it broke under the purple, then of course I would change
Well,
my
that's the
tune. Yeah,
200.
yeah,
That's the
yeah.
200 period
Then I
moving
would
average
change
on
my
the
tune.
monthly.
Yeah, yeah, yeah.
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 But the thing is, it's like what I agree with what you're saying, basically because it is in shortage.
Yeah,
You can't get a hold of copper,
yeah,
and it's in demand. You can't get a hold of other things that Freeport McMoran mines
yeah,
because it's just not available. It's being scooped up by producers.
yeah.
So, and commercial people that are using it.
Well, one thing we've established is there's a lot going on and there's a lot to talk about. So before we run out of time, I'm going to throw it back to Wally. Wally, I would like you to explain how people could get a hold of you and how you could share with them all the knowledge and information you have. And if you have any special offers, you could give them out now too.
Yes, I appreciate that. So, our company is called Right Side Trading. The idea behind that is we want to make sure that we can analyze what's going to happen on the right side of the chart. And so, I didn't really think about anything to offer, but here's what I would offer today is that anybody, if you email us at info@rightside trading, we do have our weekly Monday night webinars. And so we have that tonight at 8 p.m. Eastern time. So if you want to come join us, I'll let you come join us. Absolutely no charge whatsoever. Just send us an email saying you would like to join us. You hear this on this podcast and you would like to join us, and I'll let you come in and just come see, what we do. And that's pretty much it. But yeah, rightsidetrading.com is our website, and just email me at info@rightsidetrading.com.
Perfect. And obviously, we encourage everyone to take advantage of all the information we bring every Monday. So then you obviously can get the totality of information that's available to you. Michael, what do you got cooking right now, and how can people get a hold of you?
You can get a hold of me at michael@mgf1partners.com. There's the website. If you go, it's logicalsignals.com and go over here and go into the trade room. I'm still, simply because of all the activity, I am offering it out to people but actually I'm only looking for between 5 and 10 more people because I like to keep it small because I keep it open mic so people can ask questions and contribute. And we have a pretty good group. But my normal price is $150 a month. I'm offering out at 100 for the first month. That gives you the chance to come in, take a look, see if it was for you. We're day traders, and I primarily focus on the Nasdaq, but we also have the S&P out there as well, and we're day traders. And so there's a lot of information that goes into day trading, and if you know how to follow it and you can get it, which I do provide, particularly like gamma levels, um, they're very they're very reliable. So, and then again, with everything else that I use, Elliott, fibs, moving averages, trend lines, volume weighted, all kinds of things.
Yeah.
And just
And a lot of
lump it all
people are
together.
doing the short-term trading, so they could probably use some help. You know what I mean?
Yeah,
And a lot of people are trying to get, what do they call that, approved for prop trading and stuff like that too.
that is one of the that's kind of a specialty because I do focus on that, and I have right now I've got three that I go in and I work them with somebody else and they're trying, and then I pass it. And so then I get, the pay me account, the performance account. And so I will use it like this one. This is a performance account. And so just kind of help people. It's like, don't go looking for a home run. Let's start small and you just
Yeah.
build up this account and then you
Yeah.
get your payout and then you can go full hog.
There you go. There you go.
So,
All right. Well, that's great, you guys. As far as Option Professor is concerned, we do have an options webinar tomorrow, Tuesday. And so, if and like you'd like to go to that and find out more of what we do every week by issuing option alerts, which I have a history of for the last year, and there are quite a number of ones that have worked out quite well. So I'd like to, share how we come up with these ideas. Just go to optionprofessor@gmail.com. And you can email me at that. And so, hey, Jim, I'd like the link to go to that webinar and check it out. So you can do that as well. All right, Wally, always great to talk to you. And David,
Absolutely.
yeah, and Michael, of course, every time it's an interesting time.
thank you.
So we'll all be back together again. Thanks, Wally. Thanks,
Thank
Michael.
you.
And yep, you bet. And I'm going to send it back to David.
All right, thanks, guys. Great discussion. So just a quick reminder for everyone, be sure to follow Timing Research on YouTube, Substack, and your favorite podcast app to get the archives and the recordings, or you can just come to TimingResearch.com. This post will become the archive for today as soon as I can get it processed. And I just want to thank my guests again for today. Michael Filighera of logicalsignals.com and Wally Olopade of rightsidetrading.com and Jim, the option professor of optionprofessor.com. Thanks, everyone.
Thank you.
Thank you. Have a nice one, guys.